Whether or not Narendra Modi is confident that he can win the upcoming election, the general investor community most definitely seems to be quite bullish that the current regime will continue in the upcoming elections. There are a host of foreign institutional investors and stock market investors who are looking with wide eyes at India to be the beacon of financial growth for the upcoming 5 years. If in case this is the situation that arises in the upcoming elections, the general population will most definitely be eagerly looking toward the kind of reforms and policies that the government will embark upon. The job of a government is not necessarily to be in a business, but to make a conducive environment that allows hardworking businesses to thrive and to draft policies that allow these businesses to grow. The aim of the policies is to eventually increase the wealth of the general population. Whether it be policies like the Prime Minister Jana Dhan Yojana or direct benefit schemes or even through digital revolution, increasing the wealth will lead to a higher GDP and broader financial inclusion. This does not mean that overnight there will be a lot of wealth that will be created or the people who have been struggling financially will suddenly see overnight success. And this should not be the case either. The idea is to reward hard-working, goal-oriented individuals or companies and build an environment that allow these businesses to thrive so that they can also create employment within their community and uplift the overall economy. The key to a country reaching the top financial position is to spend most of their incoming tax collection towards capital expenditure. General public is always confused what expenditure means and where this capital expenditure needs to be spent. For example, what use is there if roads are built and the road infrastructure is improved? To a layman, goods will be able to reach their destination safer and quicker. Price disparity between different regions of the country, which was earlier possible without good or rail infrastructure, will become much more fairer when 2 or 3 more entities dive into this business and reduce the demand and supply gap. There have been numerous examples of very big countries, even such as the US, that have spent or invested heavily on capital expenditure, even when there were some recessionary signs in the economy. Why do countries do this? Because it leads to much more broader overall economy upliftment. There's more employment within the community and it leads to money being multiplied within society. And with the recently concluded interim budget, our Honorable Finance Minister Nirmala Sitharaman has also advocated for increase in the expenditure as well as infrastructure. Precisely to the tune of around 11,000 crores is what is being allocated to spent or being spent towards these sectors. As soon as such news is announced, our investor community should pay attention to assets within these sectors. If you think about it, railways, defense, infrastructure, power generation as well as airways, these are the key sectors that should fall into the mind of anyone looking to benefit from the policies that the government will come in with the respect to the capital expenditure spend that they have allocated. We at Vivekam identify companies that are bound to do well based purely on the gap between the currently traded market price and the fair price that comes out from our model. We try and identify growth companies alone. When we say growth, not in terms of price, but in terms of fundamentals. That means their sales, their operations, their margins, their profits, all of them have to grow quarter on quarter. And when we look at companies, we always look at trailing 12-month data so that there is no cyclicality that comes into play and we are not adversely impacted by identifying some companies that do well in certain quarters and that don't do well in certain quarters. So after all of this deliberation and all of this kind of update that we have taken up from the government and the budget and capital expenditure, you as an investor should be worried more so, I believe, on what kind of stocks within these independent sectors are most poised to do well in direct relation to Modi 3.0. Within infrastructure, so we try to identify companies that are growing in performance as well as having at least 20% scope to grow between our perceived fair price and the currently traded market price. So within infrastructure, what we believe are strong is Indus Towers, Bharti Airtel, Balakrishna Industries, Interglobe Aviation, which we know as Indigo, Power Grid, which is also a power generation company, Apollo Hospitals, Ultratech Cement, Adani Port, and Ambuja Cements. So these are just few companies within infrastructure that we feel are poised to do well. It's a direct link to Modi 3.0. Next, let us look at defense, which is a special favorite of our Prime Minister Modi. So within defense, again, we try to identify companies that are growing in performance when looking at trailing 12 months and are also having at least 20% scope to grow, and in some cases more than 20 but 30% scope to grow from the current price to our perceived fair price. So within defense, the first to look at is Bharat Forge, next is Cochin Shipyard, BEL, Garden Reach, and Hindustan Aeronautics. So all of these companies are companies that have more than 30% scope to grow according to us here at Vivekam. Coming to other stocks within this sector, we believe Mazagon Dock, Data Patterns are few other companies that still have more than 20% scope to grow, but not necessarily more than 30. So still fundamentally strong and still going to be a darling of our government, and I believe going to be a good darling of our investor community as well. Lastly, railways. So companies again that have at least 30% scope to grow, Titagar Rail System, Texmaco Rail, Jupiter Wagons, and lastly RVNL. So once again, make sure to make a note of these companies that hope to positively benefit from the impact of the government, of continued infrastructure focus, and with the budget also speaking on the same lines, make sure to identify and look into these companies and try and take some exposure, making sure your portfolio is still well structured and has no more than 20% exposure to any particular industry. So make sure to continue to follow Vivekam. We will definitely come out with more content that is specific to stocks, specific to industries, and try to present a broader picture of where the market is, where the market may be going, and how to identify good fundamental undervalued stocks that bode well for your financial future.